continue this afternoon to review some of the highlights from yesterday's budget speech presented by Finance Minister Enoch Godongwana. Talk about the potential impact of pronouncements made around taxation in the country. To do that, we're joined this afternoon by Professor Keith Engel. He's the CEO of the South African Institute for Taxation. Prof, a very good afternoon to you. Welcome to Newsfeed. So the Finance Minister made no major tax pronouncements. He termed it putting money back into the pockets of South Africans. But how much money is that really?
No, I agree. Well, look, let's take it. Whatever you give us, we'll take it. But generally all he did was we had inflation, and he compensated us for it, which is what you should normally do. But we'll take it. But that's all that was done there. And the nice thing was we didn't increase the rates on fuel. So I don't know if he gave back, but he didn't make the situation worse, and we thank him for that as well.
But in terms of freezing, shall we say, tax increases for this year, how much longer will South Africa be able to maintain that going forward? Because ultimately, this is a government that still is quite dependent on taxation as a form of revenue.
Well, that's why I think every year it's about relief. We're afraid the worst is going to come, not only because of what they're trying to do now, but they have so many things on the go, those things ultimately have to be funded. And I think that's the big fear and the uncertainty that's going on. But theoretically, they need to cut the size of government or grow. Taxing their way out is just unsustainable. What they'll find is they'll have less money, and then they'll have to tax again. But that's why we're so happy they didn't do it again this year.
That much talked about drop in corporate tax has come in. Not a significant drop, some are saying, because it's from 28 to 27%. Some feel that it could have been a bigger cut. Could it?
Well, it could. It depends what risks you want to take. I mean, theoretically, from 28 to 27, they didn't really sacrifice anything in revenue. All they did was deny losses. So if you have losses in prior years, normally you can use them in the current year. But now they've limited those losses. You can still use them, but not as quick. And so it was a trade-off. If you look at the budget, actually, the numbers for the loss and the rate reduction exactly the same. But it makes the optics look better. But the ultimate optics, to really make it meaningful, you've got to get it to about 25.
So how helpful is 27% in light of the goal to make South Africa more investment-friendly?
I think the only thing that we keep seeing every year is the government is saying they're not going to be pushing taxes up against business. They're trying to bring it down. So there's a good signaling that we're bringing it down and not bringing it up, and that gives investors some feeling of safety. But again, the politics undermine that a little bit.
And with any budget, I mean, you have to take from somewhere, especially in these times, to give to another part of the population or a need for the nation. Do you think the pie was sliced in the best way possible overall?
Well, again, they did is they broke it up in three ways. They put a little bit toward debt, they extended the social grants, and then they made sure that people weren't taxed higher. So they kind of spread it equally, and they didn't really take a strong stance. Now, if you take a look at Michael Sachs from WITS, former Treasury, he was saying, why don't you just put it all to get rid of debt? That might have been an interesting move. Maybe that wouldn't have been such a bad move. But you find that this government doesn't really want to make a decision, so it kind of makes a non-decision, which wasn't bad, but nothing exciting.
How harmful, though, is that then, a government that doesn't want to make sort of solid, firm decisions on issues such as the economy and economic policy, especially when it's trying to get more people employed? I mean, 35% of the population in this country doesn't work. We found out yesterday that 46%, above that, of South Africans receives some form of social assistance from the government. And businesses saying, well, if we're going to pour in more money to help you with this problem, you need to then do more for us to be comfortable, to come in and pour in these billions of rands.
Yeah, well, I think that's where the real problem is, forgetting tax in and of itself. You have a real problem is this government committed toward growth or not? And unfortunately, this government really doesn't trust business. It doesn't like business. It sees it as the enemy. And you've got Cyril Ramaphosa and a few people fighting very hard for a growth mandate, but it's always muted by the politics. And so what is the president going to do? Is he going to take decisive action or not? And the problem is he hasn't. And as long as he hasn't, these little moves about tax cuts and so forth, people go, yeah, this year, but really, are you really committed? And there's no really long-term solid commitment. And unfortunately, until you get that, you're not going to get the growth.
You mentioned earlier the issue of cutting the salary base. Labour has already said they're not going to accept that. As we sit here today in the public service, we've got a court case. We're waiting for the Constitutional Court to pronounce on whether government was indeed wrong to withhold an agreed increase in 2020 because the economic situation had changed so dramatically. So is that even an issue worth bringing up? Can it even happen? Considering also the political implications, because the ANC government and Labour are also part of the tripartite alliance.
Yeah, and I think this is one of the difficulties. It's an interesting trade-off, because really, if you're not going to cut, you can't. The problem is that if they tax more, they're going to find they're over the limit, and they're not going to get the money they need. So to some extent, they're not taxing more because they don't think they're going to get it. But let's move that on the side. When you're looking at government making cuts, the real issue is, do you cut wasteful spending in the SOEs and get them under control, or do you control the employees? Now, it seems, again, government is taking the position they'd rather cut salaries on the mass of government workers, many of whom, like policemen and educators, you kind of want to help. But the SOEs and the parastatals seem to remain a priority.
And you're right about the police officers, the nurses, because they are already coming off such a low base, right?
Yeah.
The other issue where business is concerned, small, at least, enterprises, is the introduction, as per the State of the Nation address, of a task team that will deal with removing red tape. It's not a new conversation in South Africa. There is a small business department in this country. Do we need a special task team to get rid of this when the department itself has not been able to do it?
Yeah, well, look, I'm not in favor of having departments to stop other departments. The real question is, can the president exercise authority to cut red tape, as you suggest? And he doesn't seem to have that much control over his ministers or over his departments. Why not? I don't know. But the point is, there is no direct control. You don't need to create more agencies to stop the old agencies. You just need to cut the red tape. But again, we seem committed to rules for the sake of rules, and it's strangling the economy.
Prof, so good to speak to you. Thank you very much for your time. That was Professor Keith Engel, CEO of the South African Institute for Taxation.